Brian Scott Cohen of Guaranteed Rate has helped thousands of investors and home buyers structure smart financing. Today, he's here to share everything that investors need to know about lending in 2025. Brian, welcome to the Build Up.
Hey, thanks for having me. I'm happy to be here, guys.
Wonderful. And we have a lot we want to talk to you about today, but let's talk about your background. How did you get into mortgage lending?
Oh, wow.
Yeah.
This is a good story. So I've been in the mortgage business 21 years. I started out of college. I worked at a company that didn't do purchases at all. All they did was refinances, and I'd work 9 to 9 on the phones, and we would cold call people all day. Kind of like a boiler room, but we're not going to call it a boiler room, but it was like a boiler room. And I started in that business as making phone calls at 22 years old, and I didn't really know anything about mortgages. I read a lot of books about it. I kind of just dove in and said, okay, like, what do we need to do? Let's get people in their homes. And I loved feeling like I was helping people. Like, at that time, it was a very different market where it was 2002, 2003. And the real estate market was hot. Everybody wanted to buy a home. Everything was going over ass. At the same time, I was looking to buy at that time. And I remember going to an open house. I didn't know anything about purchases. I only did refinance at the time. And at that time, you would sign into an open house and you would put your offer on a piece of paper. And I remember going in and I was looking at things that were like $399,000 at the time. Small, used to be one bedroom at the time, $399,000. And I'd go into the apartment and say, okay, I'll buy this for $399,000. They'd be like, we have an offer of $430,000. I'm like, I don't get it. It says $399,000. I didn't know what I was doing at the time. But anyway, started 20 plus years ago at a company called AmeriQuest Mortgage. Went out of business, went under, was considered like a subprime company. And I was there for 2 years, transitioned to Wells Fargo. I was there for 15 years. And then I've been at the current company, Guaranteed Rate, for 4 years. So I started pre-gray hair, pre-kids. Now I got gray hair, 3 kids, dog, wife, the whole bit.
You got it all.
Great background, right? Great journey. So you have lots of story, but let's really get into lending. That's why we're here.
Of course.
So most investors, they're looking on finding that deal. They're very transfixed on finding the deal, but a big differentiator is really about how you finance those deals. That makes a difference, right? So in your experience, what are the key characteristics of a financing structure that makes a really good real estate investment?
Yeah, so I think now more than ever, there is a lot of lending products for investors specifically. So historically, you usually need more money down for investment properties. You'd still want to see income and tax returns and all of that stuff. And those still exist, right? I think that the added bonus of the products that are here today is we can qualify people now just on the rental income. We don't need tax returns. We don't need pay stubs. We don't need, all the extra stuff. We can just basically look at a property and cash flow it. Hey, if your mortgage payment's going to be $5,000 a month, including common charges and taxes, if you're getting rent for $5,000 a month, we can give you a loan, which is a huge advancement to where products were 5-10 years ago. And I think now that the rental market, specifically in New York City, it's a hot market, right? I mean, we're seeing rental demand really strong. So the rate of return for people buying investment properties, it's a great opportunity for investors that can get a good cap rate return on their investment and can get a mortgage a lot easier than they've been able to before. So, yeah.
For sure.
I'm Brian Scott Cohen, one of the top loan originators in the country and the #1 mortgage originator at Guaranteed Rate Affinity. Guaranteed Rate Affinity arguably has the most advanced tech in the industry. Our completely digital loan process makes it easy and efficient for homeowners, from a 15-minute pre-approval to the digital application and through closing. My team and I would love to help you get into the home of your dreams.
From residential and commercial closings to litigation, Romer DeBoss is your full-service real estate law firm. We blend big firm knowledge with boutique-level attention, delivering outcomes that exceed every expectation. Contact us at romerdeboss.com.
And what's one common mistake that you see investors making who are just rushing into deals without really thinking through the financing side of it?
I think a lot of people tend to do buying the opposite, where they'll run around and make you guys, unfortunately, run around a lot. And they think that they're qualified, and they're not always qualified. And when lending, in our markets, 50% of the approval is the buyer and them qualifying, but also the building is really important, especially if you're taking them to a condo. We want to make sure the building is financeable, and sometimes that takes time to look at the questionnaire, the financials, the budget. Those are things that we look at. So for buyers, we always want to make sure, besides like a regular approval, we do something a little bit more detailed, especially if they're investors. So one, we work with a lot of appraisal companies. And with you guys as agents, we can work with you and say, hey, what is this going to comp for as a rental comp? And we can work the math and say, okay, we can qualify you just on rental, or we can use tax returns and other kind of income and structure, hey, this is what the rate's going to be. Because a lot of times people buying go on the internet and they say, oh, the rate's going to be X. Well, if you read the fine print, it's X if you live in the property, if you put down 25%, if your credit score is this, and they're running math not based on the right guidelines and information. So really important to make sure that agents and me as mortgage guy communicate and say, hey, you pre-approved my client. What's the deal? Do you know that it's what's going on with the building? Do you know how much they can get for rent? Because sometimes the client says, oh, I'm going to get X for rent. You guys are like, no, he's really not going to get that. So I think communication is the most important. I always tell agents, if I pre-approve somebody, call me so we can review it. Because on a pre-approval, you don't see credit score, you don't see debt ratio, you don't see any of that.
Right. That's super important. Candice and I, we always like to work really well with the team, right? So that includes the attorney, the lender, and it's very important that we have that communication and open communication so that way we can really advise our client as well. Because they don't, sometimes, like you said, they get overwhelmed, they don't really read the fine print, so that's super important.
Yeah.
But, no matter how solid a deal looks, right, there's always market risk and financing risk. So especially now we see a lot of talk about rising interest rate and inflation. So how do you advise investors to model their financing risk into the deal?
There's risk with everything, right?
Yeah.
And I think nobody can kind of predict where the market's going. But rates right now, depending on when you guys air this, but we're at a 12-month low. So rates are the lowest they've been in a year, which is good news for everybody. We think we're on a downward trend, but also keep in mind, always rates for investment versus primary are different. But I would always tell people that you can always start with a basic pre-approval, but go the next step. Get it done, submit it to underwriting, where clients that we work with right now, there is still a competitive market. We still see bidding wars on certain properties, especially if it's a high cap rate or a renovated property where it's in a desirable area or they'll get high returns. Where waiving a mortgage contingency is always a hot topic we talk to clients about. We kind of help eliminate that risk by doing a lot of the work up front. Like I said, we'll lean on you guys as agents and say, hey, run the rental comps for me. We'll take all the client's information up front. Underwriters work with me on site. They work for my team. So we're not submitting a loan and waiting 7 or 10 days. My underwriter, we can say, hey, this is a hot scenario. We need to make this client stand out. Let's get him a full commitment letter, and we'll turn it around within 24 hours and say, hey, look, you have less risk now because of the fact we ran the rental comps, we sent your file through underwriting, and now you have a commitment versus just a pre-approval. So if someone comes to you guys as agents with a typical one-page pre-approval letter versus mine that's 30 pages, you're going to be like, what is this, right?
Yeah.
So it helps them stand out, and it helps the buyer be more comfortable with waiving contingencies and eliminating risk.
All those competitive edges are really important in our market. And you mentioned before, nobody has a crystal ball. Nobody knows where the market's going. But are there any trends or shifts that you're seeing that investors should be on the lookout for over the next, let's say, 12 months?
It's a great question. I have a crystal ball. It's in my office. It's super heavy. It doesn't work, but I have one. I promise you that. A client got it for me a couple of years ago. I think for investors, really, it's about math, right? I mean, right now you can still get a good return. One, stock market is up 9%, roughly the Dow this year. S&P is up even higher. I think that long-term real estate investment is amazing. There's tax advantages. There's building equity to force savings accounts. I'm a big believer in buying properties. I think long-term view is rates are going to go down. As rates go down, there's going to be more demand. More demand creates prices going up. So I'm a big believer in buy now, hold, run the math on your monthly outlays, and hang on to it for as long as you want. But I think long run, it's an amazing investment.
That's for sure, like really interesting. But let's get practical. You've given some really great tips and advice so far, but for someone, an investor who's looking to make a move or put in an offer tomorrow on a property, what's one move that they can make today to really give them a fair and really good chance?
Yeah, I think for investors looking out right now, I think always number one is be realistic, right? Understand what the rent's going to be, understand what your offers are, what things are selling for in the market. Work with expert agents because they see things that aren't on the market yet. They may know about the building. They may know sales off market, where if you're just shopping by yourself, you're not going to have the expert background. You're just going to be online searching and say, oh, this looks good. But what's the background? Why? If something's priced too good, usually there's a reason for it. So I would tell them, build the team, have your expert agents, talk to your mortgage people, and make sure that you're ready to go when you find the right place. And if that's tomorrow, that's great. Make sure your team is ready. Have your attorney lined up. Make sure your agents are getting the questions you need answered. And be prepared with certain questions that I think are going to be important. And I'm not saying go on ChatGPT and send 100 questions. That's like the theme I'm getting right now. People send me like 4 pages, literally copy paste from ChatGPT. And I'm like, oh my God, that's a lot of questions. And I tell them, like, let's have a call. Let me pull out the ones that I think are actually important. Because it takes like an hour to reply to some of these things. I'm like, not applicable in New York, never gonna happen. I'm just like, so next 24 hours, build your team. You should all have a conversation together so everyone's on the same page. Understand where your money for down payment's coming from. Make sure you understand closing costs are very important. And that's my advice.
Yeah, no, you're echoing what we preach all the time, which is have your team ready and, be as prepared as you can be in this market. So we're going to finish off with some rapid fire questions so that we and our audience can get to know you a little better.
Yeah.
So we'll start off with, what's the biggest myth about real estate financing that you'd like to bust?
Biggest myth, love it. I think the biggest myth is affordability. I think that people don't realize how much it is to borrow money. We see in our market how much people are paying for rent. And a lot of times I sit there and I'm like, why are you not buying? And a lot of times you can use creative financing to finance closing costs, to get a lower interest rate than what the market rate is. And maybe you don't need a 30-year mortgage. Maybe you can do a 15 or a 40-year mortgage, right? So I think myth is affordability, where people think that they can't buy, but they really can.
For sure. And what's one book or mentor that's influenced how you think about real estate investing?
It's a great question. So I've been into audiobooks. For some reason, when I read actual paper books, I kind of fall asleep. So that's been hard for me, but audiobooks are good. I listen to it in the car, on a treadmill. The last thing I read is Scaling Your Business kind of 10 times. And it's kind of challenged me to help me grow my business. So in regards to home buyers, to start with one and then think about the next one. How do you convert one property into the next property? And same things for me as loan officers. How do I meet 2 great agents and then turn that into 3 great agents, or 1 buyer? How do you get their friend to make it 2 buyers? So it's a book called Scaling 10 Times. I think it's been great.
And last but not least, if you weren't doing mortgage lending, what would you be doing?
Yeah, it's a great question. So sports agent. So originally my first job that I wanted to do out of college was to be Jerry Maguire. So for those people who saw the movie or maybe my age know it, but for the younger generation, he's a sports agent who represents clients. So that was my first option, and they gave me a test. It was a typing test. I still type with 2 fingers, guys. But they gave me a typing test. I failed the typing test, and I never became a sports agent. I got into mortgages, but sports agent would be my answer.
Well, thank you so much, Brian, for joining us today. This has been so great, and we're looking forward to seeing all the great things you're going to do this year.
Thank you. Thanks for having me. It was a real pleasure.
When we first started Excel Real Property Management 11 years ago, we did so with the intention of protecting the investment community. Here at XL Real Property Management, we focus specifically on serving the needs of individual apartments, townhouse, and small multifamily building owners both in Manhattan and select neighborhoods of Brooklyn. Our services encompass everything: rent collection, expense payment, handling maintenance and repair, turnover between tenants, insurance needs. Literally anything that an investor would typically handle him or herself, we take care of for them. Whether you hold one individual apartment or a rental building that houses 20 units, XL is here to help with all of your specific needs.
What do you really need to know about buying or selling a home? First, it's serious business. And it's complicated. There's a lot of money on the table, and emotion too. You need an agent who knows the ropes. So, whether you're buying or selling your home, work with professionals who have a mastery of the craft.
This podcast is for informational purposes only and does not constitute tax, legal, or investment advice.
For specific recommendations, please consult with your financial, legal, or tax professional.
Your phone or always leaves your text on red? Leaves your text on red.
Built the corporate group with $1,000 loan.
Tell us a little bit about how you actually came from.
Welcome to the build-up, John Roa.
Thanks for having me.
We're coming to you here from Studio 1873.
It's not 57% over 27 million.
So then, cheers.